Welcome to Business with Louis, the show where we break down complex business concepts into actionable insights and inspiring stories. Today, we're diving into the fascinating world of initial public offerings, or IPOs. An IPO is when a private company decides to go public by issuing stocks to the general public for the first time. This process allows companies to raise capital from a large number of investors, which can be used to fuel growth, pay off debts, or invest in new projects. But why is this concept important in the world of business and entrepreneurship? Well, an IPO is often seen as a milestone in a company's journey, marking its transition from a private entity to a publicly traded one. It's a way for companies to access a vast pool of capital, increase their visibility, and build credibility with customers, partners, and investors. Moreover, an IPO can provide liquidity to early investors, such as venture capitalists and angel investors who have backed the company in its early stages. The concept of public stock offerings dates back to the 17th century, when the Dutch East India Company issued stocks to raise capital for its trading expeditions. However, the modern IPO process, as we know it today, began taking shape in the late 19th and early 20th centuries, with the establishment of stock exchanges like the New York Stock Exchange, NYSE, and the London Stock Exchange. So, what are the core principles and theories underlying the IPO process? At its core, an IPO involves a company issuing shares to the public through an underwriting process, where investment banks and other financial institutions help the company determine the offer price, prepare the necessary documents, and distribute the shares to investors. Influential thinkers like Jay Ritter, a renowned expert on IPOs, have studied the pricing mechanisms, valuation methods, and market dynamics that shape the IPO process. Our understanding of IPOs has evolved significantly over time, with advances in technology, changes in regulatory environments, and shifts in investor behavior. For instance, the rise of direct listings, popularized by companies like Spotify and Slack, has challenged traditional underwriting models and given companies more flexibility in how they go public. Additionally, research findings have highlighted the importance of factors like corporate governance, financial reporting quality, and earnings management in determining IPO outcomes. Take, for example, the highly successful IPO of Airbnb in 2020, which raised over $3.5 billion and valued the company at around $47 billion. Airbnb's IPO was notable for its use of a dual-class share structure, which allowed the company's founders to maintain control while still raising capital from public investors. WeWork's IPO was derailed by concerns over its corporate governance, financial sustainability, and valuation, ultimately leading to a dramatic decline in the company's private valuation. Another interesting example is that of Zoom Video Communications, which went public in 2019 through a traditional underwritten IPO. Zoom's IPO was notable for its strong demand from investors, with the company's shares surging over 70% on their first trading day. This success can be attributed to Zoom's strong financial performance, its competitive positioning in the video conferencing market, and its compelling growth story. First, it's essential to have a solid understanding of your company's financials, growth prospects, and competitive landscape. This will help you determine whether an IPO is the right financing option for your business. Second, build a strong team that can help you navigate the IPO process. This includes investment bankers, lawyers, accountants, and other advisors who've been through it before. Having the right expertise on board can make all the difference in ensuring a smooth and successful IPO. Third, be prepared to tell a compelling story about your business and its potential for growth. This involves developing a clear and concise pitch that highlights your company's unique value proposition, competitive advantages, and market opportunities. Of course, there are also challenges to consider, such as regulatory hurdles, market volatility, and the scrutiny that comes with being a public company. To overcome these challenges, it's crucial to have a robust corporate governance framework in place, ensure transparency and accountability in your financial reporting, and maintain open communication channels with your investors and stakeholders. In addition to these tips, it's also important to stay up to date with the latest developments and trends in the IPO market. This includes understanding the role of technology in facilitating IPOs, such as the use of digital platforms for investor outreach and engagement. It also involves being aware of regulatory changes and their potential impact on the IPO process. In conclusion, the IPO process is a complex but fascinating topic that offers a unique window into the world of finance and entrepreneurship. By understanding the core principles, theories, and best practices surrounding IPOs, companies can make informed decisions about their financing options and growth strategies. Thanks for tuning in to this episode of our show. If you have any questions or topics you'd like us to explore further, please don't hesitate to reach out. Like, share, and subscribe, and remember, every great business starts with action. Make your next move count.